This is Craig Haugard with your Financial Issues Ag Update. Well, corn had its best close in roughly 2 months Friday as talk of drought pushed prices higher. The 11 to 15-day forecast continues to hold a dry pattern for the U.S. We'll have to see what accumulates from the tropical storm in the next 5 days. And if it's disappointing compared to projections, there are 270,000 contracts worth of short corn futures that could be liquidated just to allow the funds to take a wait-and-see position with the weather. We could be entering a very volatile time period in the corn market. In the overnight trade, we have spot futures trading 3 cents higher. Friday brought the announcement of another 588,000 metric tons of soybeans sold. This brings sales to 1.16 million metric tons last week. There's talk of more sales to China today, which should be announced later this week. The math works, and China is working it. The U.S. is clearly cheaper in the September and forward time slot on beans delivered to China. In the overnight trade, spot soybean futures are trading up a penny. Well, Friday's session erased a week's worth of gains in the wheat market as the Southern Plains forecast shifted to considerably wetter in Friday's midday update. The westward drift of the remnants of the tropical storm are hard to predict, so traders will be watching to see if it pushes from the central corn belt to the Southern Plains. The Russian hot and dry forecast remains in effect for this week, during which time their winter wheat will be heading, and that's going to affect about 30% of the Russian wheat crop. Could be very bullish for our prices. In the overnight trade, Chicago and Minneapolis are each a penny higher, while Kansas City is trading up 3 cents. Cotton futures had a great outing as they posted the highest close they've had in several months. For the day, the July futures finished 179 points higher. In the overnight trade, we're backing off just slightly, having spot futures trading down 9 points as I record this. Livestock futures were mixed to end the week. August live cattle finished the day $1.75 lower, while August feeder cattle finished the session down 55 cents. Lean hog futures, on the other hand, were stronger, with July futures $1.57.5 higher at the close. Class 3 milk futures ended their week on a down note, with July futures closing 31 points lower as they settle at $18.68. We're trading down an additional 11 points in the overnight trade. Meat cutout values continue to experience pressure. Choice box beef were $10.78 lower to close at $261.48. Select boxes were $13.99 lower, settling at $246.42. Pork carcass cutout values continue to lose ground, finishing the day down $2.07 as they close at $72.78 per hundredweight. Well, this has been Craig Haugard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.